Hey there, everyone. Dave Keller here with Market Misbehavior. Welcome to my weekly show here on StockCharts TV. Today, we're going to look back a couple weeks ago. I did a special top 10 charts to watch for October 2025 with my friend Grayson Rose and the StockCharts TV studio. A lot of times we do those specials, and then a month later, we're kind of hitting a new group of stocks. And one of the things I thought would be helpful is just sort of revisit some of the names that I shared in that episode, just update you in the couple weeks since what's happened. So we'll talk about the original thesis. We'll talk about what's changed between then and now, and then think about what the game plan could be going forward. I hope that this helps illustrate what I feel is one of the most important benefits of the technical analysis toolkit, and that's in risk management, right? It's not just about picking stocks and then just putting bets on and then going away somewhere and fingers crossed, hope they work. Technical analysis is all about revisiting your thesis, about continuing to follow trends as long as they work and recognizing when trends are no longer working for you. Or as I like to say, when the chart tells you the stock doesn't deserve a place in your portfolio anymore. We'll see a couple of the charts that we highlighted have continued to show quite a bit of strength. Other sort of mixed results, and we'll talk about some updated levels and signals we would be watching for. By the way, if you want to follow charts like this along with macro market commentary and all sorts of great questions answered along the way, our daily market recap show can be found on our YouTube channel called Market Misbehavior. We also have a Market Misbehavior podcast. Last week, I interviewed Tom Atkinson from FX Evolution, fantastic technical analyst, has a successful show on YouTube with a wide following, and just a genuinely nice guy with some really interesting comments, particularly about personality and trading styles, personality tests, and what they can tell you about your investment approach. So make sure you check that one out. Also, fellow StockCharts contributors like Frank Capillari, Mary Ellen McGonigal, and many more. That's on my YouTube channel as well. All right. So during the special with Grayson Rose, and we'll put a link below so you can access that if you want to review the original episode and just see the names that I shared and why, and also some interesting charts that Grayson shared as well. We had a great discussion about different approaches about how to identify names and just how to structure a game plan based on the technical configuration. So we'll start with two of the charts that I think have held up quite well. The thesis that we talked about is kind of followed through as expected, no real change. I think this is sort of a, long and strong, continue to follow the trend as long as it works. And we'll start with Johnny John, ticker JNJ. This is Johnson & Johnson, obviously one of the big mega cap names within the healthcare sector. Healthcare is a fascinating sector, right? Johnson & Johnson is certainly one of the more defensive areas of healthcare. Within healthcare, you have things like biotech, which are much more kind of frothy, offense, high volatility types of names. Johnson & Johnson, more of a tried and true blue chip kind of stock, paying a decent dividend and, generally showing some really favorable price action. Now, the thesis with Johnson & Johnson, as you'll see in that episode, was this breakout here in July was pretty meaningful. That was their July earnings report. Positive move. We continued higher. Their next earnings report a week ago, which was back in here, and since then we've continued to go higher. The real story for me with Johnson & Johnson is right here, which I'd call a classic bull flag pattern, right? When you have an uptrend, then you have a pullback, a parallel channel of lower highs and lower lows, and then a resumption of the uptrend. So breaking above the upper line, the upper trend line. If we drew a little trend line there, and we can see there's a parallel trend line tracking the lows, just a classic, what's called a bull flag pattern. And this breakout here indicates a bullish configuration. So when we spoke, that was right around here, as you're showing quite a bit of strength after that breakout. And since then, we've continued to go higher. Honestly, from the end of September, Johnson & Johnson has remained overbought that entire time. The RSI hasn't come back below 70. And given the strong price action, the fact that we've remained above the 21-day EMA, the RSI has remained overbought. It means the stock is outperforming the S&P and the NASDAQ pretty handily here in the month of October. It's ended up being a pretty decent place to be. So update on the thesis, no change here, right? I mean, I think generally the fact that you have a bull flag pattern implies that there's much further upside. I don't like to just assume that there's going to be upside. I like to track the move and continue to update the thesis as the chart evolves. So as long as we remain above the 21-day EMA, this is one of those where I just kind of let it go and just continue to monitor. Caterpillar didn't quite make it into my top 5, but it was number 6. I gave it an honorable mention. I don't even remember if I shared this in the episode, but it was in my back pocket as an alternate name if I felt so moved as we recorded the episode. Turns out it was one of the better charts I could have highlighted, and certainly deserved an honorable mention, if not a place in the top 5 to watch. Kind of similar to Johnson & Johnson, right? Caterpillar, coming off of the April low, had a beautiful run, broke above the 200-day moving average in June, got up to a peak around 440 on an adjusted basis at the end of July. August was a sideways month, a consolidation month, right? Highs were stable, lows were stable. We hit the 50-day moving average and then rotated higher. And that breakout there above 440, clearing the July and August highs, I think a pivotal moment. That's when I feel like a chart is truly actionable, right? For me, actionable means you're getting a signal right now that suggests further upside. And I think that's what we saw there. We've continued higher. Beautiful pattern of higher highs and higher lows. And since we had our discussion at the end of September, we've continued to move higher with a big up move here about a week ago. Breaking above $500 a share. Similar to Johnson & Johnson, we've been overbought almost the entire month of October so far. The stock has been outperforming really since the end of August. But overall, since that bounce off the 50-day moving average, since the breakout above 440, this has remained in a position of strength. So again, classic trend following approach, how I would think of this now. Kind of up and to the right, what we call long and strong, continuing to show price strength as long as we keep making higher highs and higher lows, as long as we remain above the 21-day EMA. This is the kind of position I'd love to have an entire portfolio of charts that generally look like that, because that means the uptrends are in good shape. All right, those are two pretty constructive follow-throughs based on the thesis that we discussed. Let's get to some of the ones that the picture has changed a bit. And again, remember, when we talk about charts for a month and things we're looking for, doesn't mean, I'm certainly not implying you just, I would buy that basket of stocks and then just not think about anything for a month. The whole benefit of the technical analysis toolkit is that the chart updates, and every new price action, every new price bar brings you additional data, right? You're gathering more data about the thesis. And at some point, maybe the chart is still good, maybe it's not good anymore, but by reviewing the chart consistently, that's how we can identify some of these issues. And I'll tell you, that's why a platform like StockCharts can be so valuable as an important part of your daily, your weekly, your monthly routines to keep monitoring these charts and see how they evolve over time, right? It's not about just one moment in time and getting the call right. It's about revisiting the thesis as the chart evolves. So let's talk about some that have not necessarily gone straight up like the first two and talk about what would happen here. So Broadcom, right? The thesis at the end of September is, look, here's the, what we call a gap range, I guess I would call it, a support range. We talked about how the stock had rallied. This is Broadcom had rallied into a high around 315 or so in mid-August, had pulled back to the 50-day moving average, gapped above and gapped up to around 330. So that's the gap range from that high to that low. As we made a new high above 370, 375-ish, we pulled back and found support in that gap range. Gap ranges for me are so valuable. And what I usually do on my charts is I find a pattern like this. I just draw a rectangle shape to highlight that range. And I'll show you really quick, by the way. This is a trick that Art Hill showed me years ago on StockCharts, and I loved it, right? So what we want to do is highlight this range from this point to this point, right? And think about how the fact that, going forward, that's where I might expect support. It's not at an exact level, it's more of a range. So what you want to do is click Annotate, go over here to the rectangle tool. It might be like a solid color like that. You can just pick one of them. And then what I like to do is drag it down so it's a little more transparent. We want to be able to see the price action behind the range to see how the price is actually performing. Then you just left click and drag. And what I'm doing is basically just eyeballing it with these levels over here. So I'm trying to line it up with that high and line it up with that low. That's not bad. That's pretty good. And then we save it, right? So now instead of a horizontal level, which I do use sometimes it's an exact level or pretty precise, and that makes sense. But sometimes it's more of a range. And with gaps, I like to have those gap ranges on the chart going forward, because more often than not, I can't tell you how many times I've seen the price come back into that gap range. And sure enough, as we were recording the episode, we saw the pullback into that gap range. And that was the setup, right? Where we've broken out, we've pulled back, and I'm expecting there to be a bounce to the upside. So we have had, since we had that episode, we have had a couple pretty awesome bounces. Here's a hammer candle testing the range. Here we closed down into, right to the 50-day moving average, right in the middle of that range, and bounce higher. For now, we're remaining above that support range. We're remaining above the 50-day moving average. So I would argue still a good chart. However, this stock below 320 would mean we're breaking below those swing lows, we're breaking below the 50-day moving average, and we are no longer holding that gap range. So I would say the chart below 320, all of a sudden that bullish setup is no longer very bullish of a setup, and for me would mean no, move on to other opportunities. So I think Broadcom really at a key moment here as Q4 is evolving to see if it can hold support. Remember, bullish charts make higher highs and higher lows. So if we can track those recent lows, track expected levels of support, we're waiting to see if buyers come in and provide that demand that would push the price back to retest the previous high. So for now, I'd say still okay, but a bit of a question mark with Broadcom. Welltower, if you watch the episode, this is in the REIT space, real estate, but really is a senior living, senior housing type of play, really playing on the demographic shifts here in the U.S. with a large number of baby boomers getting to the point where they're either looking at or already sort of migrating to senior housing of some sort. Welltower is a direct play on that particular theme. So while it's in the real estate sector, it really has a particular thesis. And you'll find in real estate, there's a lot of things with a very kind of narrow focus to their real estate empire. And that's what we see with Welltower. The technical thesis was this, right? Resistance in August, resistance in September. We broke above that resistance level here and continued higher. So we got up to around 180. We're pulling back a little bit, and the question was, does it hold that support? Very similar to the chart of Broadcom, right? We have a breakout level, and anytime we have a breakout, I want to see if it could hold that particular level. What we found following this chart since that episode, it did not hold the breakout. And so for me, that is a big red flag where if I had taken a position, I'd probably take at least part of that position off because it's just telling you that you're playing a breakout and the breakout wasn't sustained, which means something different's going on. So while it might still be a decent chart, it's not what you expected. And Justin Mamus, a famous technical analyst, wrote a number of really cool books about trading using charts, said if a stock doesn't do what you expect it to do, sell it. His words, not mine. And so the idea was, right, if you're playing on a particular thesis, a particular pattern, a particular structure, as long as that keeps working, you're good. But if something different happens, not how you lay it out, right? If it's not trading according to your plan, then something else is going on, right? There's some other thesis you need to get your head around. So, best to sort of unwind the position and reassess and reevaluate. So breaking down below 170 for me, that's where I had an alert set. That alert triggered as we broke below the level. So since then, what happened? Well, we broke below the 50-day moving average. We did hold those recent swing lows. And the only thing that might keep me in a name like this is the fact that we've held the most recent swing lows. As we've talked about many times, right? An uptrend is a pattern of higher highs and higher lows. And as long as we can hold the most recent swing low, and that's around 163, 164, then we're in good shape. That level held beautifully. And actually, the day we tested those lows, we actually closed at the highs of the day, followed the next day with the break back below the 50-day moving average. Since then, we've actually retested the early October high. We'll see what happens today. We're recording this on Tuesday, October 21st. Potential bearish engulfing pattern. That's where you have a big up day, a big down day, higher open, lower close. If you use bar charts, that's called a bearish outside day. That might imply the next 1 to 3 bars are lower rather than higher. So if that holds going into the close, I would expect a retest of the 50-day, maybe a retest of those swing lows. As long as those swing lows hold, I think the chart is still okay. Not great, but okay. That's the update on Welltower. All right. Our last one is Apache. Actually, 2 more. Is that true? Yeah, 2 more. Apache, APA, right? The chart of Apache was a very different one, and I'm a big fan of what I call technical diversification. I found if I have a portfolio of charts and the charts all look identical, I get a little worried, because what that means is I'm probably playing the same theme with a lot of different charts, right? If you have charts that are all kind of trending higher and all look identical, the same kind of sense of speculation, the same euphoria may be driving all of those names, which means once that euphoria dissipates or once that optimism is gone, my position of strength, all those names going up, probably all start to correlate on the way down as well. There's a chance of that. So I like to sort of diversify. So Apache was an attempt to get into a very different space, energy, not a sector I particularly love, but a chart that looked pretty good. And while I would say a lot of energy stocks do not look good, Apache was interesting because of the trend, right? As we're recording the episode, we're here, stocks breaking out above the 200-day, breaking out above this symmetrical triangle or coil pattern. So that was a real good trigger there in August. We then, since that moment, held above an ascending 21-day EMA. And for me, as we mentioned, like on Johnson & Johnson earlier and Caterpillar, as long as we hold the 21-day EMA, I'm not too concerned. But that also means when we do break the 21-day EMA, I am a little bit concerned. And that's what happened right about here. From then, we've consolidated. We've chopped around the 50-day moving average. This week, we're trading down right to trendline support. And as we talked about, that was sort of my last level, right? A trend line connecting the April low and the August low, if you look, lines up pretty beautifully with where we're at right about now. So I would say while it has broken the 21-day EMA, the uptrend that we saw did not hold as we might have hoped. It's pulling back to trendline support. I think this is the level. This is sort of the do or die moment. This is the point of no return. If it can hold there, and if the RSI can hold 40, this is still a pretty good chart, because what that would mean is basically we're in a big trend channel. And StockCharts trick, if you have a trend line, hold down the command key on the Mac. I'm not sure what the key is on a PC because I don't use one very often, but on the Mac, it's hold down command, tap the one trend line and drag it, and you get a parallel line. Great for drawing a trend channel, by the way. So if you look, look at this really consistent uptrend. So, here we were just at the upper end of this channel. Now we're at the lower end of this channel. So as long as we remain within this trend channel, maybe this is an opportunity to ride us back into that channel range, and maybe this is a buyable low on the way up. That's kind of the thesis at this particular moment. But if we would break below that trend line, all bets are off, and I would say the chart no longer worthy of our capital. All right, final one was Coinbase. This is the last one that I threw out here. Obviously, a play on cryptocurrencies. Bitcoin has been, and Ethereum and other cryptos have been super volatile here recently. Today, you have precious metals tanking. You have cryptocurrencies ripping to the upside. So plenty of volatility. We highlighted this particular move, the short-term resistance here around 340, 345, the breakout, the gap above that level with move to the upside. Soon after we had our discussion, we had a big distribution day, a big outside day, a bearish outside day, as we talked about, broke below the breakout level. That's not great. But if you look at what's happened since then, we also highlighted this Fibonacci framework, taking the April low to the July high, 38.2% of the way down, so around 329. That lines up pretty well with the 50-day moving average, and that's where we found support here in the last week or so. So I would say this is kind of that point. If we would break below there, downside certainly to the 200-day moving average around 280, and I would probably be avoiding this and resetting, looking for some sort of stability. Previous support has come in right around the 50% retracement lows here in the 290 to 295 range in August and early September. So maybe that would be a downside objective as well. But for me, sort of seeing the bullish breakout, if it can't hold the breakout, if it can't hold the 21-day EMA, that means something's different. So we're sort of resetting here. We'll see if this is able to hold. If so, could be a nice higher low to build on, but much below these current levels, breaking below that Fibonacci and moving average support. I think that's a chart no longer looking as constructive as we talked about. So, folks, that is how we can use the power of the StockCharts platform to follow trends. Again, I think a lot of times people think of as technical analysis as sort of a crystal ball, right? You just look for some ideas, you pick good patterns, you put them on there, you're done. Honestly, that's not where you're done. That's where the work really begins, right? Analyzing the charts and taking an initial position, that's the easy part. Following charts like this consistently, using the chart lists feature on StockCharts to review and reflect on how the trends are evolving, using alerts and scans to make sure you don't miss significant breakouts or breakdowns on the charts that you're interested in and on your holdings in your portfolio. That's how a platform like StockCharts really starts to move the needle and help you benefit your portfolio and your investing journey. What do you think about these charts? Which of these charts are you most excited about or most skeptical about? Make sure you drop a comment below and let me know. For Market Misbehavior, I'm Dave Keller. Thanks so much for joining me here on my weekly show on StockCharts TV. Don't miss my market recap show called Chart This with Dave Keller. You can find that on my YouTube channel called Market Misbehavior, along with the Market Misbehavior podcast with lots of great interviews for your enjoyment. Have a great week, and remember, it's always a good time to own good charts.